Good morning and welcome to this Monday, June 8th edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at earningsbeats.com, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, it was another big day on Wall Street on Friday. Looks like we're going to open up fairly strong again this morning, at least based on futures from about 10-15 minutes ago when I looked last. But before I get into all of that, I do just want to let everyone know, especially those of you maybe that are new to Earnings Beats, that if you go over to earningsbeats.com, you can sign up for our free Earnings Beats Digest newsletter. All you got to do is put in your name, email address, no credit card required. It is free. It comes out Monday, Wednesday, Friday, so 3 times a week. Usually some trading ideas, some educational tidbits about technical analysis. We look a lot at relative strength, earnings. For a while, accumulation distribution, I don't think that is nearly as important in this market now as it was just a couple of months ago or even just a couple of weeks ago. It seems like now the market is rewarding just about every company out there. In fact, some of those that were beaten up the worst during the pandemic are the ones that are rallying the strongest right now. So again, I don't know that the accumulation distribution necessarily is the best thing to be focused on at this point in time, but this newsletter that we have, I think, focuses on a lot of the things that you need to be aware of in the market. All right, let's go ahead and jump in to what happened first on Friday. I'm going to go over a few things today with you. One is of course, the daily market recap. Talk a little bit about energy. So in the segment I like to call Talking Technically, usually just pick a topic and talk about it for a bit. Energy, I kept talking about, you can see even on this chart in the recap, this gap resistance and all these tops coming in near that $40, 41 level. Really wanted to see that taken out. Well, we took it out. We took it out last week. We took it out with a bang, especially with the action on Friday, where you can see the XLE rose more than 7.4%. But we're going to break down that sector, talk a little bit about energy. Then I'll get into the strong earnings chart list because many, that's to me still the flagship for our members and for us at Earnings Beats. Through thick and thin, I think the strong earnings chart list is really a major focus of what we do and really should be part of your trading. And so I want to talk a little bit about some of the companies that have pulled back. Maybe not the ones that have the scooter ranks up at 98, 99, but instead maybe see some of those that have pulled back a little bit, maybe aren't participating as much in what's going on right now, because earnings season, believe it or not, starts in about another month, maybe just a little over a month. Seems like we just finished one. Well, we're going to be starting another one pretty soon. And I suspect as we get closer to earnings, you're going to see the market shift away from, rewarding the companies that didn't do very well. I think we're going to go back to looking at companies that have great earnings prospects. And so I think keeping an eye on that strong earnings chart list is going to give you some opportunities for some stocks that maybe are being ignored right now that I think will be back in the limelight fairly soon. And then get into earnings spotlight. Not a whole lot going on this morning. There were a couple pretty good reports out, though, and the market was reacting pretty well on those. So we'll take a look at that. Upgrades, downgrades, and then we'll wrap up the show with 3 you must see. But go ahead. Let's get back to this daily recap of what happened on Friday. And you can see Dow Jones Industrial Average up another 3.15%, 800, excuse me, 1 second. Sorry about that. The Dow up 829 points, you can see. So that put us back above 27,000. And I've commented on this a few times now, but it's pretty amazing. A lot of times we use these round numbers as psychological resistance. A lot of times you'll see the market really pause there, pull back, sell off when you get close to these key levels. Well, in the last 8 days, trading days, the Dow Jones has gone through 25,000, 26,000, and 27,000. That doesn't happen very often. And the way the market is set up right now, who knows, maybe another couple of days will be at 28,000. These levels are going rather quickly. And, I mentioned the accumulation distribution earlier. When you look at some of these, I've still got them on my charts. I'll probably switch back to the RSI pretty soon. But you can see the major indices pointing up with the accumulation distribution. And you can see a lot of these groups that are now looking strong with their AD lines were not looking so strong on the way, when the market was trying to rebound back in April and May. A lot of these sectors, you can see the AD lines were still beaten down quite a bit on a couple of these, at least energy and financials for sure. But now they've started to turn back to the upside and trending higher. So there's really not too much going on right now that's bearish, to be quite honest. And I think that really bodes well for this market going down the road. The more charts and the more stocks and so forth that look bullish, you got a lot of technical buyers in this market. A lot more than we had 20, 30 years ago. This market is driven a lot by technical analysts, technical buyers. And so when you see, charts and you're looking at all these different charts and very few show bearish signals, well, you're going to get mostly technical buying, not technical selling. So outside of folks selling because things are overbought, which is what we're seeing a little bit now in some of those pandemic stocks that were doing really well, the stay-at-home stocks, I think they're going to set up for great opportunities here. But right now, in this moment, they're not doing well. And we're going to have a little patience with those. But in the meantime, we've got all these other companies that have been rebounding. So great action really across the board as you look at this. NASDAQ underperformed, was only up 2% versus the 3+ % on the Dow. Mid caps 3.18%, small caps 4.4%. So really across the board, we were still moving higher. Energy, financials, also strong day. Talked about energy a little bit. I'm going to talk about that more in a bit. Financials doing well. It's pretty easy to know why. 10-year Treasury yield. Finally, we got yields moving higher. That tends to send both financials and industrials higher because it's an indication of the economic activity picking up. And so especially industrials, that whole group is for the most part pretty sensitive to economic conditions. And so anytime you see the 10-year Treasury yield going up, normally the industrial is going to benefit. And there are a couple areas within the financials. You've got your banks, life insurance company, investment services. Those types of areas tend to do very well when the yield is rising. Then we've got real estate. Not too many groups beaten up more than real estate during the last few months, but this group is now broken this downtrend, is trending higher. There's just nowhere to turn really if you're bearish in this market right now. Everything's looking much better. Technology continuing to move higher. They've suffered on a relative basis over the past couple of weeks, but still on an absolute basis, there's nothing wrong. And the worst performing sector of them all over the past couple of weeks has been healthcare. But healthcare doesn't look bad on its chart. It had a huge run and it's been consolidating. So there's a difference between being relatively weak and having a poor technical chart and being relatively weak and just simply seeing consolidation off a very strong technical chart. And that's the difference right now with healthcare. I still view healthcare to be extremely bullish, but it's consolidating. When it breaks out, that's when we're going to want to be much more involved from an active trading standpoint. All right, let's keep moving on. 10-year Treasury yield. So let me get an update here on this. Big move last week. And you can see here the 3 days where we moved up from under 0.7% to above 0.9%. That was a big move. And currently right now we are pretty much flat, up 0.5 basis point. So really not doing too much today, but we are in an uptrend. Notice the 20-day is now above the 50. The 20 is pointing up. And this is the best the PPO has looked on the 10-year Treasury yield going back the last 2 years. This is the strongest it's looked to the upside. And as I've said before, one of the biggest beneficiaries of the yield rising is the stock market, because when the yield's rising, money's coming out of treasuries. Well, if money's coming out of treasuries, normally that money flows into equities, and the area of equities that really benefits are the financials. So you can see during this move to the upside, especially the last few days, look at the financials relative to the S&P 500. This is a relative chart. So it's not This isn't just telling us that financials are going up. This is telling us financials are outperforming the benchmark S&P 500. And that has not been the case throughout 2020. I mean, look at the 10-year Treasury yield falling like a rock, and look at financials falling like a rock on a relative basis, right along with it. So everything was going down back in March, but financials were going down faster. And it really wasn't until about 3 weeks ago that we began to see this turnaround. And I don't know how far it's going to go to the upside. I think that's obviously going to depend a lot on following the 10-year Treasury yield. But I would say this, as long as the 10-year Treasury yield remains above the 20 and the 20 remains above the 50 and they're all moving up together and the PPO's above the center line, you want exposure in financials as a trader. Now, again, if you're talking about, is this a signal that it's an all-in from a buy and hold perspective? You just want to jump into financials and don't look back for the next 10 years? I wouldn't say that. I do like the market over the next 10 years, and I think financials will do fine, but I don't know that they're going to be the leader over the next 10 years. So that's not what these signals tell me. This right here is telling me that financials are leading the market right now, I suspect. And from what I looked at in pre-market action, they were poised to lead again at today's open. I suspect as long as we've got this yield rising to the upside, financials are going to do very well. All right, next up, I want to talk a little bit about energy because there's been no group really that's done better than energy in the very short term, last week or two. But you can see this huge move last week. We were at about 38 and a half on the XLE a week ago Friday. And this past Friday, we were all the way up to 44.84. That's a huge move in a sector. In fact, if we look at the sector summary here, you can see last week, or actually just on Friday, I mean, this is not a bad return for a year. This was just Friday. Energy, 7%. If we switch this up to 1 week, you'll see energy up 15.69% the last week. Look at the next two, financials and industrials. I'll be honest, our portfolios did not do well last week. In fact, the last couple of weeks we've been lagging. The model portfolios shockingly held up pretty well, but the others were actually down last week. And part of it is the groups that were beaten up, healthcare especially. We've got quite a bit of representation in healthcare. And even though technology did pretty well here, if you go into technology for the last week, look at software. Software has been one of the best areas of the market as a group, even though we saw energy up 15%, financials 12, industrials 10, 11, whatever they were. Software up 1.5% last week. Software on a relative basis really just did not participate. And there were a number of really strong software companies, not just those in our portfolio, but really good software companies that have been just flying to the upside with tremendous growth. And they were getting hit last week pretty hard to the downside, not going up 1.58%, but actually getting hit hard. Some of them down 7, 8, 10, 15%. So not only are we seeing new money coming into the market and money rotating from treasuries, but we also have a lot of rotation within equities. So you've got a lot of money that's been made in software that is now rotating because they've made their runs. I think when it gets time to earnings season, I think you're going to see this group running again. But is it going to start tomorrow? Is it going to be later today? Is it going to be a week from now, 3 weeks from now? I'm not sure. But what I am feeling pretty good about is that the pullback in software is going to create some great opportunities heading into earnings. If this group hasn't broken out and really continued or started to make a big run by the end of this month, I think early July, you're going to start to see a really significant move in software heading toward earnings. Just my opinion. All right, let's see. So as far as energy goes, I mean, we've got the breakout. We've been trending higher. Throughout April and May, even though we were trending higher, we really weren't seeing a lot of outperformance. And the way you can do this is just simply putting in a colon, $SPX. So now instead of looking at energy, we're going to look at energy relative to the benchmark S&P 500. And when I do a relative chart, I like to use a line chart. Just gets rid of all the noise on a candlestick chart. But you can see, I mean, on a relative basis since March, we have bounced, but we are way below where we were to start the year. So yes, we are rising right now. Energy's been a great place to be in over the past 2.5 months. But end of April through until about a week ago, we really just went sideways. So as the S&P was climbing, energy was just kind of going up, riding along coattails. Last week, we saw leadership. And I suspect, I mean, anytime that I've got the relative PPO above zero, the relative price action above the relative 20-day and the relative 50-day, and everything's moving up, that tends to be a pretty good time to be exposed. Now, I'm not a big fan of energy as we go forward because I still believe the long-term chart on the dollar remains higher. So, oops, that's not what I wanted. So when you're looking at, say, I'm going to pull up the dollar, US dollar index. Now, we've been going down, which obviously has been helping energy materials recently. But if we look at a longer-term chart, and I'm going to pull up, we'll go weekly 5 years, but I really want to go out even further. Let's go 15 years. If we connect the lows here, and I'm going to annotate this just for a second. So if we connect the lows from 2011 and then come up here, you can see probably somewhere around, you know, depending on where you draw the lines. I mean, you could go maybe go as low as something like that. I would tend to go right around in here. I think 94, 95, I would say is a big area now on the dollar. Here you can see the price low back earlier in 2020, and then you can see this trend line coming up. 94 area is going to be pretty important. We're still at 96, 92. So I still believe we're in this uptrend. And as long as we're in this uptrend, that is the problem for energy. Because if I take this exact same chart, and now I take energy versus the S&P 500, and we update it, you can see the downtrend since 2011. So ever since the dollar's been in this uptrend, energy's been in a downtrend. We just saw a huge relative drop. This is a relative bounce, in my opinion. Now, have we bottomed long term? Maybe. I think we've got a little bit more relative run in this move to the upside. And then I'd be a little bit more cautious. As you get up closer to this trend line, I think then energy becomes maybe a little bit more scary at that point. Now, within energy, over the last week, you can see 15.69%. But what about the different areas of energy? Well, coal has made a huge run, 37% in the last week. Oil equipment and services, 20%. You can see everything did well. Pipelines were the lowest, though, in this group, gaining only 8.8% last week. You know, certainly you could take any of these groups that you're interested in. You know, oil equipment and services beaten up so bad, and it seems like the market is really rewarding those. Not a whole lot of stocks in the coal area. That's why I point to the oil equipment and services area. But you might just click on that, and then it brings up these these stocks, and I might look at it in scooter order and maybe even in reverse scooter order. I mean, you could take a look at some of these. They're going to be stocks that have really made huge moves already. So look at Neighbors. I mean, this was a stock that was at 10 6 weeks ago. It's 65 now. Is it a great time to be jumping into this one? I don't know. I'd rather try and catch one that maybe is just breaking out. So I think if we switch this and look at the lower scooters, I'm not sure why it's not going to reverse for me. Well, we'll just do it this way. Go down toward the bottom. I'm looking for something maybe Schlumberger. Okay, Schlumberger scooter's still at 4. It's a large cap. It just recently made a breakout. So here you don't have the same 10 to 65. Here we've gone from 12 to 22, which is a little bit, still a lot. It's a big move. But I think Schlumberger, especially if we got a little bit of a pullback, is one that I think could do much better as we go forward than something that's already made a huge move. Because if energy on a relative basis rolls back over to the downside, some of these stocks that have gone from 10 to 65 are going to be subject to perhaps a big move to the downside. I would think a stock like Schlumberger is going to find technical buyers, you know, in the upper teens as the 20 days rising. A stock like Neighbors that we were just looking at is going to be a little bit different. So might want to keep that in mind. All right, strong earnings chart list. This is the flagship for me. This is still my go-to. Now, right now, I'll be honest, a lot of my trades have come out of the short squeeze chart list. off of the week AD chart list. I talked about this last week with our members in the daily market report, that money is just, it's not that Zoom isn't a good company anymore, or Teladoc, or Netflix. These companies are still very good companies, but Wall Street's not having anything to do with them right now. And part of trading, if you're a momentum trader, is being where the money is going, not where the money is idling or coming out of. And so I like to look at the strong earnings chart list when things are more settled. I still think this is anytime's a great time to look at strong earnings chart list. I think it's always meaningful. But maybe what I would be doing here is looking for the scooters that are maybe not right at the top, but maybe some that have pulled back. So I don't know, maybe something down in the 80s. And the other thing to maybe do is to pull up sector and industry group. Eventually, I think some of these healthcare companies are going to be really strong. So what you could do, you've got the scooters there. We could change it so now the scooters, it's the lowest to the highest. And then if I go into, say, sector healthcare, when I come down to healthcare, it's got them all ranked from the lowest to the highest. Now, I don't know if I'd go all the way down to 11. I mean, these are stocks that probably are being very, very beaten down, maybe even broken down. But start getting up into the 60s, 70s. Some of these companies, and I know, for instance, TMO, I looked at this one earlier, and there's a negative divergence, but it's been holding up really well. See how it just broke out? Pretty good volume last couple of days, and it's broken out again. But there's your negative divergence. Higher price, lower PPO. So could we consolidate a little bit further here? Yeah, but I really like this stock. So if we did consolidate, moved back down one more time before the end of the month, this is the kind of stock I would be interested in off this list. Lilly, I like Lilly, Eli Lilly, but it's pulled back and hit one of our key support levels, bounced. It's just consolidating in this area of support. I think Eli Lilly will be favored when money rotates back into healthcare. But when money's not rotating into healthcare, there's not going to be as much money to rotate into Eli Lilly. Instead, you've got money pouring into airlines and gambling stocks and hotels and recreational products, recreational services. That's where the money's going. So you can pound the table, or I can pound the table on Eli Lilly all I want, but if the money's not rotating here, it's not going to do me any good. My account's just going to sit flat, which is what it's been doing, or even moving down, which it's been doing in the portfolios here over the past week or two. Eli Lilly is in one of our portfolios. Still a great company. And I think by the end of the quarter, I think we'll see a completely different looking chart. But right now, as a short-term trader, I'm not interested in Lilly. Let's go over here. Let's see, maybe look at one more before we get into earnings. Just want to look at maybe at one other healthcare. I'm just looking. I've seen so many of these charts. Well, this one's down to 91. MMSI was looking pretty good. Actually, this one's still looking good, but very similar to TMO. It's moving up and it's holding up. It's not like it's flying with the rest of the market, though. It's going sideways, but you got an issue here with the PPO. Last time when it was doing this, had an issue with the PPO. Now, that was the pandemic, so it was a little bit out of character. But I expected maybe this initial move down to the 50-day. I wouldn't be surprised to see MMSI pull back. I could even see it in the upper 30s. At that point, it would become a great reward to risk trade. So these are stocks that I'm definitely keeping my eye on. I'm just, again, as a short-term trader trying to stick with momentum, trying to make money in the near term, I can recognize that this is not where the market is looking right now. That could change very quickly, but right now, I showed you how energy was doing really well relative to the S&P 500. Well, if I pull up the healthcare group versus the S&P 500, and let's get rid of that candlestick. So just looking at the top part of this chart, this is the problem right now. It's not, I still believe we're in an uptrend, longer term uptrend, but we can't ignore the fact that this is where money is simply coming out of right now on a relative basis. So until this starts to turn back around, starts to move higher, I'm probably not going to be interested. Now, I do think there's a relative support down here. It's getting close. that's an area maybe that, maybe if you wanted to start looking at building a position or two, that might not be a bad area. But overall, I think right now being completely in healthcare or being having a heavy load of healthcare probably isn't going to work out very well in the near term and hasn't been working out. All right, earnings spotlight. Let's take a look first at a company that reported this morning. I'll give you the updated price action on the stock. This is Thor Industries. THO, stock up 8% in pre-market. Look at this stock. It's been absolutely flying to the upside. Market was anticipating good numbers. They actually blew the numbers out of the water. I don't know if this was a misprint, but I saw that they reported earnings of 43 cents. The market was expecting a loss of 43 cents. So an 86-cent swing. Wall Street anticipating a good report. Now we're getting it. Stock gapping up. I'd actually be probably a little careful after this huge run up and a gap up at the open. If I was fortunate enough to hold this company into earnings and I was riding it, I think I might sell it at the open, at least a portion of it. Because after a huge run up like this, it could be buy on the rumor, we get the results, and then sell on the news. So I'd be a little careful. Another one that came out with better than expected results, REVG. It's a smaller cap, micro cap company. But REV Group stock is up 6.65% this morning. They had a loss of 9 cents, but Wall Street was expecting a loss of 13 cents. So it came in better than expected. It's been rising, breaking out above these prior highs, now looking to gap up to about 850, getting close to this reaction high and the 200-day, though, up closer to $9. So this is another one that, with earnings, might see a little bit of a pullback. All right, upgrades and downgrades. How about, I'm going to go, I'll tell you what, I've got 10 upgrades and downgrades. I don't have time to go through them all, but of the 10, 9 of them are higher in pre-market. Even the downgrades are higher in pre-market. That'll give you an idea of what kind of market we're in right now. The upgrades, Duncan up 5.26% in pre-market. JetBlue is up 7% pre-market. Limelight Networks, LLNW. I'm going to pull this chart up. This is one that was doing extremely well during the pandemic, has pulled back and really just broken down. It is getting an upgrade and it's up a little bit, but it remains in this downtrend. Be careful there. Here's another one that was very, very strong and has pulled back. This is one that's getting my attention for a possible run into earnings. It might be a little early still at this point, but if we pull back into the upper teens and we get back into the 19 and a half area, that would be really tempting on a stock like Norton LifeLock. Stock is up 4% with an upgrade today. Zillow up 5% with an upgrade, getting close to the overhead resistance around $67. So with today's move to the upside, we're getting close to that overhead resistance. Among the downgrades, we had Schwab, GIII, which I believe is G3 Apparel. Yep. This one's up 2%, but you can see the huge move. Many of these apparel stocks had massive moves last week. And so this is one that I don't know. I think, they made such a big move. I'd be careful chasing them. But if I was in them, the strategy for me, as long as the stock continues to put in higher highs and higher lows, it's hard not to stick with it if you're already in it. Now, if you're looking to get in, this was a stock a week ago that was 10. Now it's 17. I can't chase a stock like that. If it's already made the breakout and it's already had a few really good days, chasing it can be really painful if these stocks, have a bad day or two. Murphy Oil downgraded. Market doesn't care. Murphy Oil up over 5% today with a downgrade. Look, and this again is part of that energy group going up. The only one that's down today of the 10, by the way, PVH is up today with a downgrade. The only one that's down is Penn. PENN, Penn National Gaming. Stock down 3.94%. It was downgraded today, but look where it got to, right up to this 40 area. Had a reversing candle, by the way. You can see it better on a sharp chart. So I would expect to pull back here. Well, it wasn't quite. I thought that was a dark cloud cover. Didn't quite do that, but we did have a red-filled candle right at key price resistance. Can't expect it to go up, continually. The stock more than doubled in the last 3 or 4 weeks. So I wouldn't be surprised to see a move down to test the 20-day eventually. Pull back down into the upper 20s, low 30s wouldn't surprise me at all. So the stock is down, like I said, almost 4% pre-market. All right, let's wrap this thing up with 3 you must see. I'm going to start off. I talked about some of these companies that when they pull back, you should be kind of licking your chops. I think there are some companies that are going to do very well going into earnings, but they're not doing well right now. Vertex Pharmaceutical, this is in one of our portfolios. I think this one has got a negative divergence, lower PPO, higher price. We've gone down. We've tested this 50-day. You can see the PPO getting close to center line. I think this stock is sideways consolidating. It's got really good support at 250 if it gets there. So this is one I'd be fine building a position 260 down to 250 if we get there. Even the current price, taking small position. If that's your strategy, buy some of these stocks when they're beaten down. Vertex is one to consider. Cloudera really got hammered last week. CLDR came down to the 20-day. That's an area to consider. What I would really like is maybe an intraday move below the 20-day and then coming back up above that 20-day. That could be a sign that a short-term bottom is in. So keep an eye on Cloudera. And then just to wrap things up, I haven't talked about Apple in a while, but Apple has continued to move higher. Look at the breakout above the February high. So I know there's a lot of naysayers, always a lot of naysayers on Apple. I never get it because all the company does is just make money hand over fist, just keep going higher. But if there is one negative here, you want to be a little careful. It is making a breakout with this negative divergence in play. I've seen it before, though. Take a look back here in December. You see how the PPO is going down, and we made the breakout here. Never resulted in any selling. This one up here did, though, but again, it was pandemic related. So it's a warning sign, but it's not a guarantee that the stock is going to go lower. I really like what's going on here with Apple. All right, let's see what's the market is opened here. We got the Dow up 170, S&P up 10, NASDAQ on a relative basis struggling. Look at the NASDAQ 100 in red. This has been the way the market's been operating lately. You have to recognize it. You can, try to impose your will on the market if you'd like. Usually doesn't work very well. So you got to recognize what the market's telling us. And right now, the market is favoring all of those companies that were beaten down. I showed in my, I think it was in the portfolio report that I issued to our Earnings Beats members yesterday. I showed a composition of the various chart lists and how many stocks within those chart lists gained various amounts. 92% of our weak AD chart list, and these are stocks that are stocks that really struggled during the pandemic. These were stocks that were being heavily distributed from late February, early March, all the way through into April and into May. These were stocks that could not catch a bid. So they were designated in our weak AD chart list. And these were stocks we had no intention of trading. If anything, if you wanted to short, that was the list you went to short. Well, things have changed. Let me just tell you that last week, the S&P was up 4.91%. 92%, 92.5% of the stocks on the weak AD chart list, 248 stocks out of 268, gained more than 10% last week. That 92.5% of this chart list more than doubled the S&P 500 return. So it wasn't all of our portfolio stocks, the stocks that have been really strong on a relative basis. Those weren't the stocks leading the charge last week, not even close. It is the beaten down. It is the Boeings that are just shooting through the roof. Anything that was beaten down, Travelers, all the financials, the banks, small caps, anything that had been crushed on a relative basis for the last 2 months has been soaring the last week or two. And so far, it's continuing today. As you can see, still NASDAQ down, or NASDAQ 100 down. But let me just say, NASDAQ 100 finished at an all-time high. It's not like, that's the good news. Everything's going up. It's just on a relative basis, we're seeing much more leadership from those beaten down stocks right now. And so we have to consider that in our trading, short-term trading especially. Longer term, again, as earnings start coming up, I think we're going to see it flip back again. I think some of these high growth companies are going to do very well heading into earnings, but we've got to recognize that right now that's not what the market is looking at. All right, everybody have a great day. I'll be back tomorrow over at Stock Charts TV. It'll be a pre-recorded show that I'll be doing later tonight after the market closes, but we'll be over there at 9 a.m. tomorrow morning, so be sure to check that out. Everybody have a great day. Happy trading.